If you look backwards to the global financial crisis, the glass is half full. We've achieved a lot in terms of cross-border regulatory cooperation. If I look forward to where we have to go, the glass is still half empty. What we've seen over the last 20-30 years is an increase in cross-border banking. So, for example, Italian bank expanding into Germany, Spanish banks are expanding into the UK, or let's say European banks going into Africa, Latin America. The decision that a national supervisor, for example, the Bank of England takes, has implications for the countries where a UK bank has subsidiaries, has branches, or where this bank lends to. So we like to call these the externalities. For example, many years ago, the Bank of Portugal approved a merger between two reasonably mid-sized to large banks in Portugal. These two banks also merged, for example, in Mozambique, which created an enormously large banks with almost 50% market share. Bank of Portugal did not take into account the effect of the local merger on the host country, in this case Mozambique. There has been cooperation between regulators even before the crisis, but it was what I call a sunny day cooperation. Now the problems really arise when a bank gets into trouble and then it has to be resolved. Now a bank failure is not like a corporate failure when a non-bank fails, because depositors panic, they run, like in Northern Rock here in the UK. Creditors do not renew their credit lines. Borrowers lose their access to their loans. So it has widespread repercussions both for the real economy but also for the rest of the financial system. Failure of a cross-border bank in the home country has implications for the other countries, and again this calls for cooperation across supervisors. We've learned from the crisis, when it comes to cross-border bank failures, we need to focus more on rainy day cooperation and not just on sunny day cooperation. And a lot has happened across the globe in terms of putting into place national resolution frameworks, into increasing capital buffers, into what is referred to as a single point of entry. You have other much looser arrangements, such as between the UK and the host countries of several UK banks in Africa, Latin America, Asia, for example. And you have forms in between, where, example, in the Nordic-Baltic region, there's a much closer cooperation, not only on sunny day supervision, but also in preparation for a potential bank failure. So a lot has already happened, but it's not enough yet. So we have to push further to be sure that if such a big bank fails, it is being resolved in an efficient way which minimizes the damage for the rest of the financial system and for the real economy. The European Banking Union relates primarily to the Eurozone, but we also know there are very close connections between the financial place, London, and many Eurozone banks. So also much closer coordination will be necessary. We economists think we have the answers. We are often being supported by supervisors, by technocrats, but the political willingness and the political possibilities to actually come to these agreements that underpin closer regulatory cooperations are often limited, as we see, for example, in the Eurozone.